So, thanks a lot for the introduction, Christiane, and thanks for having me. I recognize that I am the last thing standing between you and cocktail reception. So I will do my very best to be sharp and indeed try to lead you through a bit of a tour de force for why we think companies right now actually have a self-interest to spearhead this transformation. And if I were to say it in one sentence, then it's that the context has changed quite fundamentally over these past years. I think no one can say that as humanity we are in a spot that's good and that we're on track, that policies are on track. But what's nonetheless true, almost everywhere in the world, is that climate action is now fundamentally accelerating. As of this morning, around 80% of the world's emissions were covered by a national net zero commitment. Not all of these commitments are in time to be in line with the Paris pathway. Not all of these commitments, actually few, are already backed up by sufficient policies, but they are there. They weren't there 5 years ago, and these countries start regulating this. And where they do, the consequences for the context in which businesses are in can actually be quite drastic. Let's take the example of my home country, Germany, where we've looked into what it would actually require to achieve our net zero commitment in 2045 and our target in 2030. And it's actually quite drastic. In power, we would need to exit coal in parallel to nuclear, which together only a few years ago made up around 50% of our generation mix by the year 2030, almost 10 years earlier than we originally committed. Already today, industrial companies in Germany should not reinvest into any fossil asset in their infrastructure. Already in 2030, we would essentially have to stop selling new ICE cars and transport 5 years before the European Union is currently planning that. And already within the next 2 years, we essentially have to stop installing new oil or gas boilers throughout our building stock. This is very drastic, a very drastically different context. And in our perspective, overall, outside of this room, we still quite strongly underestimate the pace of change and the extent of change in this context. It's because we tend to underestimate technology progress. Time and time again, we've underestimated how fast new green technologies went down the cost curve and how fast this drives adoption and how fast this adoption changes industries. It's happened in renewables, it's happened in batteries and e-cars. It's not happening as much, ironically, in technologies that wouldn't force us to change our context as much, like hydrogen or CCUS, where I feel, if anything, we are rather overestimating the progress that these can make. We underestimate policy progress. In a world where ambitions have to increase and are increasing, and in a world where policies at this point in time are insufficient to achieve these ambitions, it is not sensible to look at a current policy scenario and think that this is a projection. If policies change, they will only ever change in one direction and become more ambitious. We underestimate how soon commitments that are still decades away actually change the realities of industries today. Of course, net zero targets in 2050, 2045, that's still decades away. And of course, we will still burn fossil fuels, even in Europe, for decades to come. But that doesn't mean we still invest into things that explore, process, burn fossil fuels for decades to come. We are now at a point in history where everywhere in the Western world, because the whole Western world by now has a net zero commitment by or before 2050, investment into fossil assets almost across all sectors start carrying significant stranded asset risk. That means if you invest in one today, there's a good likelihood that you will not be able to use this asset over the entire economic lifetime it has. Let's take the example of industry in Germany that I mentioned earlier. An average gas boiler in industry has an economic lifetime of roughly 20 years. We have a net zero target in 22 years. If you still build one today in your company, don't expect that you will have that much fun with it in the 2030s. We underestimate how soon change will strike even more on capital markets. The value of a company on the financial market is not so much based by how successful it is today, but by how successful investors believe it will be in the future. That means if the context changes today, investors will start pricing this in extremely quickly. The chart behind me shows the stock price evolution of major German and European utilities right from the moment the energy transition started. And when this happened, the market share they lost to renewables in the beginning was microscopic. The hit in profits they took was a little larger, but still comparatively small. The impact they had on stock prices, once investors understood that their business context had changed and will never go back to the old normal, was much, much faster. Within only 2 to 3 years, they lost some 70 to 80% of their stock market value, even more related to the overall market, which grew in this time horizon. In this world, it's our belief that this old notion of the prisoner's dilemma, which says that if you move first and the others don't, then you will suffer for it, is just not true anymore. I'm not sure if it ever was. But that to the contrary, we live in a time when in this transformation, early movers actually benefit from moving early. They do so in tech. What this graph shows is an overview of just the additional investments by sector we have to make in Europe over the next 2.5 decades to get to net zero, and these amount to more than 6 trillion euros in efficiency solutions, in electrification, in renewables, in bioenergy, in hydrogen, in CCUS, in the respective infrastructures for these technologies, and that's an enormous opportunity for technology companies who commit to these non-fossil technologies early and try to win in these future markets. And it's an opportunity far before these technologies actually become cost competitive. As Ørsted has shown, which today is valued higher than all major German utilities combined, on the back of their success in a technology, offshore wind, that has only reached cost parity 3 years ago, or by Tesla, which is valued higher than all German automakers combined, with a product that hasn't even reached cost parity to this date, but will over the coming years. It's true for consumer companies. 3 years ago, we did a study with the World Economic Forum in which we've looked into what it would actually take for companies in the major global emitting value chain, at the end of the major global emitting value chain, to bring down all of the emissions that are in their entire supply chain. So all the materials, all the logistics, all the production, what would it take to bring these down, and what would that actually cost? And the extremely interesting finding, I find, was that for very, very many end consumer companies, even moving to a fully net zero product, net zero metals, net zero plastics, net zero paper, net zero logistics, net zero production, would only need to increase the store price by around 2%. 500 euros for a car, 1 euro for my sneakers, a few euros for a smartphone, 1 or 2 cents for a bottle of soda. That's the extent to which costs of these products would have to increase if everything in their supply chain moved to net zero. Why is that? Because, of course, there are many things that they need to procure that will be much, much more expensive once you move to net zero, plastics, steel, but there are also many things in that supply chain that aren't expensive to decarbonize, because there's still a lot of efficiency potential, because a lot of the emissions are created by power and moving to renewables isn't that expensive. But more importantly, because the materials that actually create a lot of the emissions in their products are only responsible for a relatively small share of their total product costs. In many cases, not more than 10 to 15%. And we don't believe that this isn't an opportunity. And we don't believe that the notion, yes, but people say that sustainability is important to them, but they aren't willing to put their money where their mouth is. We don't believe this is true. And none of the data, at least we look at, indicates it is. Already today, in a lot of consumer product sectors, people are paying substantial price premiums for products that are marketed sustainable. And that doesn't even mean yet that they are net zero. I deem it impossible that companies who are able to sell us our everyday goods aren't able to commercialize a green product that is 2% more expensive than its fossil counterpart. And because that's the case, in our view, moving early is also an opportunity for the companies and industries where this is objectively the hardest. Process industries, the materials, logistics, where decarbonizing is technically extremely difficult, but where it's also a significant economic challenge to do so, and where prices would increase a lot higher. Because we believe there will be a market for green versions of these products within this decade, and we believe that these markets will actually even be undersupplied. That means demand for green versions of these materials will actually be higher than supply. Why is that? Because the companies at the end of these value chains have announced demand. The number of companies that have made so-called Scope 3 science-based emission reduction commitments, so they've committed to bring down emissions in their value chain in line with the Paris pathway, has increased drastically over the past years. And in some end customer sectors has by now already making up around 50% market share of all the companies that operate there. That means these companies who have made these commitments, they will have demand for green materials. And, sorry, this is a super complicated slide. This is from a WEF study we did last year. The commitments upstream aren't yet matching these. What this shows is, on the very right side, what the market share in different end consumer sectors is of companies who have made science-based Scope 3 commitments. So they've committed to buy green materials. And on the left, you see the market share of companies who need to supply these materials, who have made science-based emission reduction commitments for their own production emissions. The left side is leaner than the right. This means the green materials that the companies on the right are going to ask for, as of now, won't be produced. That means a company who today, even in a time where these markets aren't yet as visible, will likely serve an undersupplied market, and serving undersupplied market tends to be a good economic value proposition. Which is why on aggregate, again, in our perspective, this notion of the prisoner's dilemma just isn't true. Already today, in our perspective, companies who spearhead this transformation create competitive advantage because they hire and retain better talent, because they tend to operate in faster growing segments, because they often manage to identify levers that actually combine good economics with emission reductions, because they have lower regulatory risks, because they can get cheaper financing on capital markets, and because, as the result of all of this, they are valued higher on capital markets. Climate leaders in their respective segments already today trade at a premium. And while that's correlation, not necessarily causality, what it at least shows is that this old notion that it's dangerous for companies to move faster in this, and that this carries significantly risk, we cannot find evidence for. What we can find evidence for is that companies that actually move boldly not only change their own fate, but they manage to change their industry by raising the bar for what good looks like Maersk did with the first net zero commitment in shipping, by reshaping their context if their context isn't friendly enough to decarbonization, like Ørsted did when they shifted from Danish oil and natural gas to a renewable champion in their geography and cooperated with regulators to develop favorable regulation for this. By disrupting their industry's business model, like Tesla did in automotive, but any OEM probably should have done instead. By showing that part of this transformation isn't as economically scary as people might think. We work for a lot of companies who, once they ask the question, how do I bring down emissions and reach a specific target, they tend to find a much more economic way of doing so. Repsol is an example. By pioneering a net zero product, like SSAB did with green steel, like NREP is right now doing with the first life cycle net zero building in the world, and many others are. But I've now painted a very optimistic picture. I do not want to make the impression that this is easy. This is unbelievably hard. And this is where you come in, because these companies, to do this, will need all the help they can get. The leaders need all the help they can get, but also the followers will need all the help they can get in navigating this. They will need insights where the way forward is still a bit foggy. They need advice on their own transformation. They need supportive policies, which in many cases aren't in place as of now. They need common infrastructures that are supportive of this transformation. They require financing, which can only be provided through a combination of the public and the private sector. So what I would like to leave you with is this transformation that's ahead of us is a truly, truly, truly historic one. And it's one that will only work if everyone pulls at the string in the same direction, and if we do it together. I think that the context and the opportunities for that have never been better. Thank you very much.